I'm going to talk about the difference between crypto traders and investors in Canada and why it matters. I do want to preface this video by saying that this is not financial advice and that you should always speak to a professional when you're making financial decisions, as everyone's financial situation is different. What may be good for one person may not be good for another. Having said that, let's get started. Before I get into why it matters, I first want to distinguish the difference between traders and investors. Now, there's no exact definition, but for myself, when I refer to traders, I'm referring to people who are quite active in analyzing the market to get in and out of their positions. Traders are people who would more so buy and sell with a short time frame to capitalize on price movements. I would say that the holding periods would be minutes, hours, days, or on a longer time frame, possibly weeks. As for investors, these are people who take a more passive approach to making money. These are people who just dollar cost average or put in limit buy orders and don't intend on selling what they've bought in the near future. They usually have a longer holding period, like several months or even years. Now that we understand the difference between the two, let's look at why it matters. So the main reason why it matters is because of deductions. In Canada, if the Canada Revenue Agency, also known as CRA, deems your activity to be that of a trader's, your activity would then be considered business income, and thus 100% of your profit, which is income minus allowable expenses that you've made from trading, is included in your taxable income. However, if your activity is deemed to be like that of an investor's, then your gain would be considered a capital gain, and thus only 50% of that gain is included in your taxable income. So for example, if you've earned $100,000 from trading and you incurred $20,000 of allowable deductions / expenses against that income, then $80,000 is included in your taxable income. On the flip side, let's just say that you bought $20,000 worth of crypto and it appreciated to $100,000, which you then sold it. And for the purpose of our example, let's say that this $80,000 is deemed to be a capital gain. This means that only half of it, which is $40,000, is included in your taxable income. For demonstration purposes, I've used a tax calculator to help give us a rough estimate of how much tax you would have to pay and how much you would have left if you lived in BC, for example. If you're interested in the tax calculator to play around with yourself, I'll leave a link down below in the video description. So as you can see, on that $80,000 of trading income, you would need to pay $20,900 in taxes, leaving you with $59,100. This means that the average deductions rate is 26.12%. Now, if we look at the same example, but instead of $80,000 of trading income, it's now capital gains. We can see that the amount that you would need to pony up to the CRA is now only $5,393, which then means you're left with $74,607. This means that the average deduction rate is 6.74%. This is a difference of about $15,507. This means that the investor is about $15,500 better off than the trader, although the money quote unquote earned is the same. What this essentially means is that the trader will need to make at least roughly $102,000 to be in the same financial position as that of the investor. This is an additional $22,269 of profit. A huge reason why more is taken out when the income is deemed business income is because of CPP/EI premiums that need to be paid. These premiums do not need to be paid when the income is deemed to be a capital gain. Now that you understand that investors get to keep more of their earned money compared to that of traders, I would caution you to just immediately claim your gains as capital gain unless you've got good evidence to substantiate that claim or have spoken to a tax specialist about your situation. For some of you, it may be clear cut on how you should include your gains into your taxes, while it may not be for others. Also, for you married people or people with partners who you trust a lot to not run away with your money or your crypto, you may want to speak to a tax specialist about optimizing your crypto gains between you and your partner. For example, if you know that one person consistently makes significantly more than the other person, it may make sense to take the risk to buy and sell the coins under the account of the person who earns less money and claim the income, whether it's business or capital gains under that person's taxes. This will effectively reduce the amount in taxes paid. Again, speak to a financial advisor or a tax specialist about this, as this will require some planning. Now that I've taken a look at the financial advantages of investors, let's quickly take a look at the financial advantages of traders. For traders, they get to deduct some expenses related to earning their income as outlined by the CRA. My guess is that most traders would be trading in their own home, and so a portion of their expenses can be written off. The amount depends on your situation, but either way, you get to deduct some expenses relating to that income. These are probably the most common expenses that I can think of. Capital cost allowance, in other words, depreciation value of your assets, rent or mortgage interest, but there's a stipulation there, internet and utilities. This means that you're essentially getting a quote-unquote discount on your purchases and expenses through a reduction in your taxes owed. With all of that said, we can see that both investors and traders have their own set of financial advantages. As for the disadvantages, they're more so qualitative and has to do more so with the risks involved, in my opinion. What this all means is that these are all factors that you should take into consideration when deciding whether you should be a trader or an investor. So pretty much that's the difference between traders and investors in Canada and why it matters. All of what I've talked about in this video is if you've realized a gain only. The situation may be different if you've realized a loss, so just keep that in mind. Now, if you're interested in learning more about crypto taxes in Canada, check out this playlist here on taxes.